talking now to Rajesh Kothari, founder and managing director at AlfAccurate Advisors. Rajesh, very good morning and great to have you with us here
Hi,
on NDTV Profit. All right, let's start. Let's start with your view of the markets. And you know, earlier today, Neeraj and I were talking about the latest social media post from Trump, where he is inviting anyone with $100 billion to come in and invest, saying he's going to make things very, very easy for those who want to invest in America. For emerging markets like India, and let's start there, do you think a flight of capital to the US is a serious concern?
Well, I think at this point of time, one very important thing is our domestic market is big. And that basically provides enough opportunities for any multinational to come into our country. Having said that, we can't afford to be complacent. The flight of capital from country A to country B depends upon your land reforms, your labor reforms, ease of doing business, the cost of power, and very importantly, the interest cost. So we need to be more competitive. China is supporting their domestic economy in a very big way. Now, America has also joined that. India has also started a few years back with Make in India efforts, the PLI reforms. But I think we need to do much more to make sure that we remain competitive globally. So, yes, I think we all have to make all the hard work to make sure that we remain very, very competitive.
Rajesh, good morning. Neeraj here. How are you feeling about investing incremental money that your clients would be putting into your funds currently? I mean, are you wanting to sit on a bit of cash, or are you finding enough opportunities? And if so, where do these opportunities exist?
Hi, Neeraj. Good morning. I think over the last 2.5, 3 months, we were a little bit staggered. But as market has corrected, in between there was 6-7% correction in market. And if you look at the BSE 400 mid and small cap index, almost 30 to 40% of that index stocks witnessed 20 to 30% correction. So I think the next year belongs to be selective. You need to have a bottom-up approach rather than top-down approach. Nifty will keep delivering, reasonable, I would say early double-digit kind of returns because earnings growth will be about 11-12%. But there are so many companies in India across sectors, be it automobile, be it banking, be it capital goods, be it EMS companies, be it a CDMO pharma companies, be it a few platform companies. They are growing 18, 20, 30%. There are enough opportunities, and I think the question should be, forget the overall market. Market will keep delivering you reasonable returns, but look a little bit, inside it, a little bit deep dive, and I think there are enough opportunities to make serious wealth creation over the next 3 to 5 years.
Mr. Kothari, what are you buying right now? It's a relatively dull period in the markets. Are you using this opportunity to identify great ideas? What are you finding exciting?
Well, we find always a little bit dull, boring period as a more interesting period for us, for stock pickers. Those are the times where, you don't have to lose your patience and you can keep buying at your price limit orders, Otherwise, when market flies, it becomes difficult. But I think, there are opportunities. For example, in auto ancillary space, there are a lot of opportunities. I'm difficult to give the name which we are right now buying into. But for example, one of the auto ancillary company, which is a play on US Class 8, plus it is a play on defense. Now, if you look at the North America Class 8 trucks, even if you plot that growth, it has been one-way downtime, correct? And from here on, the Class 8 trucks is likely to improve from here on. On top of it, this company is diversified across other 3 verticals. And if the US is going to revive, particularly in the oil and gas segment, that also is part of the one company. And also, of course, the domestic defense is the 3rd pillar for this company. So it is one of the largest 4G company I'm talking about. So we are positive on that. Second company, which we have been adding weightage, is the capital goods segment. And in this segment, we find opportunities for the companies which are positioned for HVDC projects, companies which are positioned for data centers, where growth is 5 times in 5 years, companies which are positioned for decarbonization, and companies which are positioned for, what I would say, Scott transformer kind of a technology. There are only few companies in the world which can provide this kind of a technology. And one of our largest holding from last 1.5, 2 years has been that, and we keep adding to that name. We are also positive on the CDMO space for quite some time, and we believe that as more and more products goes from trial stage to commercialization stage, and GLP-1 and peptide opportunities, your growth opportunity is going to be much bigger over next 24 to 36 months. And fourth, last but not least, is the platform companies, which we continue to own and we continue to like. One of the exchanges and also one of the largest digital insurance play. So these are the basically few names across various sectors which we have been adding to.
No, fantastic, Rajesh. But I'm going to come back and ask you about specifics. From all of these 4 areas that you've mentioned, any one top pick in each? You've talked about CDMO, you've talked about CapEx, you've talked about platform companies as well.
I think it's not like one topic. We are a portfolio builders and we construct the portfolio, and it is at portfolio level we keep delivering. So it's just not that one stock which become top pick. Unlike sales side thing. For us, what matters is how we keep delivering consistent, superior risk-adjusted return. So, but there are enough opportunities. Let me tell you, this slowdown. The macro headlines, the first print or headline that Indian economy slowdown. We don't believe in it. I think the companies are facing slowdown. Consumer is not under slowdown. You need to excite consumer enough to buy your products. Think of it, for example, consumer segment. One of the largest FMCG companies reporting 4-5% growth, but one of the largest retail companies reporting 40% growth. Now, how do you explain this? Correct. So there are enough opportunities, for the companies to innovate themselves, to launch the new products at the right price, and make sure that consumer buys that product. So competition is going to be fierce, but there are companies which are taking exceptional steps to make sure that they keep growing strong double digit over next 24 to 36 months.
Okay. Rajesh, people are mixed on banking. Are you constructive there, or are there better pockets to bet on? I mean, you don't have to match the index per se.
Good question, Neeraj. We have been underweight on this theme for quite some time. Over the last few months, we have been adding to this weightage. Rather than looking banking as a total, we divide banking into various segments. And within one segment, which we have a overweight position, was NBFC. And there we own one of the largest gold finance company, which is doing exceptionally well. We also own one of the largest second-hand commercial vehicle financing, which is also doing exceptionally well. And then we, of course, have a bunch of private sector banks where we have been adding weightage in the recent times. And the third part of banking and finance is also the platform companies which are linked to banking and finance. And there also we have been overweight. So we do the micro segmentation within each sector and then try to see where we should have the overweight versus underweight position. Companies which can report 18-20% kind of a growth, that's where basically we are aligned towards.
All right. Thank you so much, Rajesh Kothari. Great to have you on the show this morning. So a whole host of ideas there coming in from AlfAccurate's Rajesh Kothari.